Thank you for those who are either joining or staying through for part two of Financial Security 2030, the Financial Security Forum that's now been introduced into the Medicarians ecosystem. We have a great panelist, another group of panelists with a fresh set of perspectives on the things we've been discussing as part of this equation of the aging population, the boom of retirement, the demographic, political, economic sea change that's happening in this country. We're seeing it and feeling it and living it every day. It's going to be accelerating incredibly. And we have perspectives from earlier on the main stage, the previous session, and now this to get into it. And I'm going to start by working through. I'm going to dispense with introductions. Everybody's name and images are up there, titles. We've got the perspective, as I said, of distribution, of aging in place on the care provider side, long-term care, not long-term care insurance, but the care provider side, and then in growing and building a business that will create a legacy. How do you add to this industry and bring talent in, foster that talent to meet these challenges and opportunities that come ahead? So, Justin, I want to start with you and throw a question your way. So we're all adjusting to this evolving consumer, the consumer dynamic. And what do you think is some of the most insightful information about consumer habits from what we saw this past fall over the last few months and where we stand now that everybody here could learn from? What's some of the insight you can give on that?
Yeah, so our friends at Deft Research, I don't know if anybody in the room uses them or looks at their studies, but it's wonderful insight into just the shopping habits that we're seeing in seniors today. They recently did a study on shopping habits just related to 2025 AEP that we just came through. And one of the things that was a part of that study was really a gauge of temperature to multifaceted relationships that a Medicare beneficiary has with providers, carriers, doctors, nurses, all of the above. And this little sliding scale of temperature tracked year over year how that changed, their satisfaction or just their general feeling about it. Nothing changed more than Medicare Advantage this year. And it changed negatively. It changed by double digits negatively. And to nobody's surprise, we just came through a really disruptive year, right? And it really rivals, if anybody was in the industry back then or remembers or not, 2013, 2014, that was the last time we had this much disruption in the market. And incidentally, that was the last time that CMS reimbursements weren't keeping up with the medical inflation rates. And they fixed it. We got lucky. We've had a streak of 8-9 years of really rich benefits where seniors have really great options. They're very fortunate right now. But again, what we're seeing is a reset is about to happen. We already saw part one. One of our friends said, if this year was an earthquake, next year's going to be an aftershock. And I think what we're set to see, so that's all information I think we could deduce in our minds, right? But I want to leave us, and I'll probably talk a little bit more about this a little bit later, but one thing that's going to really gauge people's attention this year, people are going to look at ANOCs more than ever before because they're scared. Their consumer scores, their trust scores with carriers are lower than they've been in quite a while. So when they look at that ANOC, if they see a negative change to an ancillary benefit, to a supplemental benefit, they're twice as likely to switch or to shop their plan. 8 years ago, 75% of Medicare Advantage beneficiaries didn't even shop their plan. They just let it ride if they were happy. Just this past AEP was under 50% did that. So you're seeing a humongous rise. And so I think we've got to get our head around how we are adjusting to a changing consumer. And one big thing their eyes are going to be on is supplementary benefits. And I'll probably make a few more points about that later.
I just want to touch on something you said there, Dustin. So with that much plan switching versus what it used to be, is it dissatisfaction or is it just heightened awareness because of all the advertising?
Some of it's forced disruption just because of some of the carriers' issues. The carriers are racing to keep their plans solvent, right? And so some of it is plan footprints exiting. So there were millions of people that were left with a terminated plan without a crosswalk this year. And again, it's all due to some changes they're making to try to get around. Well, I mean, does anybody know anything about VBID and the decision on VBID? So VBID is one of the two ways they get supplementary benefits into Medicare Advantage plans. They've shut that off now. There's now only one other way to do that, and it has to do with chronic conditions. So what they're trying to do is limit the supplementary benefits you add to a Medicare plan to being reduced to people that have chronic conditions, and all the other sizzle benefits, let's just scale those back, because what they're seeing is we might be able to save $2 billion in overuse of those benefits in the past. So again, they're trying to make large-scale changes to get Medicare maybe in a healthier spot, and they're trying to meet in the middle when yes, there's medical cost inflation, but I think the carriers are trying to do their part too to be responsible with the benefits and how they leak them out.
Interesting. So, Tara, one of the biggest challenges to this aging population, and this is not new, this is not something in the future, this is something we're living now and we've been living for a long time, is aging, long-term care, and what do you see as opportunities and challenges over these next 5 years as the population continues to age, as all the boomers cross over to the age of 65 and the Gen Xers start joining them going through that door?
Yeah, so I think right now there's a general lack of knowledge when it comes to retirement products and insurance products and just available resources in general. And what people are aware of that's out there, I think they have a general misunderstanding of what is actually covered by Medicare or supplemental benefits or long-term care. And a lot of people in this area and aging in place, I've been in this industry for 19 years, and a lot of people end up finding themselves very reactionary. And part of it is we're not talking about things, and we have these blinders on our eyes. It's not gonna happen to me, it's not gonna happen to me, and then bam, a diagnosis comes, or in a car accident, or something happens, and you find yourself in that position. I think in your white paper you mentioned 70% of people are going to need long-term care. That's the majority of us in this room, but I'm guaranteeing most of us are sitting here like, it's not gonna happen to me, it's not gonna happen to me.
As you said that, I just thought, not me.
Yeah.
Maybe not. You got a 30% chance that it's not going to be you, but if people aren't educating themselves.
Good thing you're in Vegas.
If people aren't educating themselves on what's out there, right now, the number of options you have when you're in a proactive market, there's huge opportunities, lots of different avenues you can take if you plan properly. But many of us find ourselves in this very reactionary state where we have this many options, and you're trying to get out of the hospital, and it's Friday, and everyone wants to go home, and rush, 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 and I don't have the funds, and then we end up in situations where we lose control. So I think that's a big hurdle that we have to overcome as we move forward. Also, just a lack of retirement savings. People aren't saving as much, or they're tapping into that because they need it for other areas of their life. And it's really, a lot of people are taking time off from work to care for their older adults or family members. And this is particularly having an effect on women, because us women are the ones that usually quit our jobs to take care of our family or our husband's family. And then what happens if you get divorced before you've been married 10 years, and then your Social Security is impacted because your finance was impacted, and now you can't claim on your husband's benefits, and you're financially penalized the rest of your life for taking care of someone. So I think those are other opportunities where we just need to get out there and educate folks. And also, you kind of touched on it already, is this complicated healthcare system where patients are already confused as to what's going on, but also on the provider side. My husband owns a PT/OT company. He's been doing business in 20 years in Orange County, California, and you can be working for one provider and get paid one rate for one plan, and like $200 for the same service and $58 for an older adult. And so providers aren't able to financially support their practice as well, and it's just getting very, very complicated. And then something I don't know if we've touched on yet, but lack of age-friendly housing. That's a big issue. Even if you go to 55 and up communities, these homes aren't prepared for aging in place. Just think about your own house. How do you get from your driveway into your front door? Is your driveway sloped? Are there stairs? Is there a threshold to the entryway? And people are in the hospitals after surgery ready to come home, but they can't come home because they didn't prepare for it. And they think Medicare is going to cover it, but we know Medicare doesn't cover home modifications. So I think the biggest thing that we can do right now as an industry, whatever part of the aging in place umbrella you fall under, is just educating people and letting them know the resources that are out there, because an informed consumer is really what we want to have, and let them make the decision on what's right for them and provide the proper education.
Yeah, that really is the key. It's education. And that gives an opportunity to all of you, because you can help provide that education. And whether it's just doing the right thing for clients so that they're not sitting there without realizing the exposures they have, or finding a way to partner and bring this into your practice to help grow your business. You're talking to the people that need what she's talking about. This is why we're all together in this room. And speaking of growing your business, Mike, when it comes to meeting the future challenges and opportunities of where things are going with this population, what does an agent owner need to do to future-proof their business, to help bring in talent, to help nurture talent, and also to position themselves to be establishing a legacy for the future where that they might hand off in some way?
Yeah, great question. The thing that I see with new talent is that new talent just plain out don't like to be micromanaged. And as an agency owner, you have a lot of control issues. You think you have to control everything. So with new talent, you have to give them the mentorship and show them how that they can help grow the business with you and truly invest in them. Like you guys invest in yourself. You guys come to these conferences to learn, because your team, and when you're the best version of yourself, you show up that way for your clients. You show up that way for your staff. And the saying that really hit me the hardest is that the talent don't leave jobs because they don't like what they're doing. They leave because they don't like the person they're doing it with. So you have to look in the mirror. It's like, okay, this is my largest asset. How do I protect it? How can I invest in my staff to keep building this asset for me? So flip the table a little bit. How can you give them the mentorship they need? How can they potentially take over this business? Because, newsflash, everyone dies. Something's going to happen to your business.
It's not going to happen to me.
But the thing is, that's where you got to invest into that younger generation. Like, do you like to be micromanaged? No. So why are you going to do it to somebody else?
And Justin, building on that, what would you be advising agencies that you work so well with to prepare themselves for the next 3-5 years coming as we're getting to that 2030 mark?
Yeah, I'll use 2 one-liners for this. One, growth creates complexity, complexity kills growth. And I think we're at a spot where agencies are going to cap out on their growth unless they, change their bones. They change their structure to something scalable. Anytime we all grow, it creates complexity. Anytime we branch into a new product area, anytime a carrier changes a process, anytime a platform changes on us, it creates a complexity which really is a tension point for your organization. Whether you're a one-person shop or a 10-person shop, it creates a tension. It's within you or it's between your people. And so if you don't work really, really hard, almost fanatical at simplifying the things that start to become complex as you grow, you will not be able to scale. You will not be able to meet the needs of your clients. Now let me add something. Because of what I mentioned with the VBID process, with that decision, we will see disruption with supplementary benefits. I don't think we're gonna see as rich of plans on the supplementary benefit side. And remember what I said, when they see their ANOC and they're twice as likely to shop a plan, you want them to shop it with you, but what happens when they come back and say, hey, my dental's gone in my MA. How do we get some dental? Hey, my inpatient copay went from $350 to $650. Last year, you asked me if I wanted that hospital indemnity plan. Well, I felt like I could, take the burden of $900 if I had to go into the hospital for 3 days. But now that it doubled, can you afford $1,800? Can you afford $2,000? It will require fixing these problems and building these solutions in different ways than we ever had before. Which really brings me to my second point. Methods are many, principles are few. Methods may change, but principles never do. If you're looking for a mission, you have one in this industry right now. And sometimes we need to be reminded. We don't need to be taught something new. Maybe sometimes we just need to come to Vegas and have somebody tap us on the shoulder and say, you have a really worthy cause that you get up every day and you go help people with things that they're scared of. So if you're looking for a mission, you have it. That principle of our industry will never change. And if you believe in that mission, you're willing to be really open-handed with methods, right? That's the hows of what we do in this industry. And I think we're gonna have to really hold really tightly to that mission over the next 3 to 5 years, because that disruption is coming. It will require different things from you as an agent that the last 10 years required from you. It'll require different things from GAs. It'll require different things from our vendor partners, everybody. The ones that have a mission and they are held really, really tightly to their vision and their mission, they will have the fortitude to change and really transition and pivot. The ones that don't have that are the ones that will fold up tent and go do something else.
Words of wisdom. Words of wisdom. All right. It means Justin's winning the session so far. But Tara, you're going to come in strong on this one. We know that long-term care is a topic that people don't want to deal with, they don't want to think about, they don't want to plan about it, in what you touched on previously. But going forward, with an aging population, and again, like the Gen Xers who refuse to admit they'll ever get old, they were the first generation to be 30 at the age of 13 and still be 30 at the age of 60. What do you see as...
It took me a minute to figure that out.
Did you do the math? Everybody, get out your calculators. It adds up, I'm telling you. So I'm Gen X, I'll never get old. So, Tara, what do you see as opportunities and innovations that are coming in aging for a population that is going to demand a different experience, a different quality of life in their aging, and when they need supports and services?
Yeah, thank you. That's a great question. And I I think my first answer to your question was more doom and gloom. This is the area that excites me of the future. I mean, we didn't pick the sexiest industry to go into, but right now, it's a really, really exciting time for us because people are more collaborative than ever, inside the Aging in Place umbrella and outside as well. And it's really exciting. Like, I geek out about all the age tech stuff that's here. Have you guys seen all of that over there? I'm so excited to see in the future that our homes are going to take care of us, that there are toilet seats that can tell based on the way you sit and stand the second your balance comes out, become off balance, and when you need to start installing grab bars. There are light fixtures that can sense when you start shuffling your gait and you need to add a walker. There's fall detection sensors with all of this AI that everyone's talking about that maybe just because you fall at the same place in your house every day, maybe it's not because there's something that you're falling over like a rug. Maybe it's medication mismanagement where things are making you dizzy and your medication's making you sick. So things like that, I'm really excited to see coming down the pipeline. That's really going to help us age in place safer and easier, particularly with the whole hospital at home movement, which I think is fantastic that it's so person-centered moving forward. But even just the way that we are adjusting old products for this new marketplace. For instance, a reverse mortgage. We'll take a reverse mortgage, right? I think a lot of people think these are very need-based, last resort kind of products, but there are ways that they're taking a reverse mortgage and turning it into a financial longevity product. So I can give you an example. If this interests you, I have a chart where if you took out a reverse mortgage 20 years ago but put it into a line of credit instead of getting monthly payments, and then on up markets, you pulled from your traditional retirement, on down markets, you left your retirement alone and pulled from the reverse line of credit. In 20 years, your estate will have almost $1 million. This is a real example. I can give you the numbers. It's $968,000 more in their estate just because they use a creative, non-traditional way for this product. And also you can use it to purchase a home, maybe buy a duplex, have the one unit totally safe, ADA friendly, aging friendly, and then the caregiver lives next door. And maybe the upper two units, you have a fourplex. The upper two units you rent out so you have income coming in, and you put that back into your line of credit to prepare for financial or medical things that happen out of nowhere. So there's way that you can proactively plan using old products in new ways. So that's very exciting. And also I love that there's this whole holistic approach to retirement planning. And I think you touched on it, Chris, on your session this morning on the main stage, where it's not just thinking about finances in a silo and housing in a silo, but it's everything, including transportation and social engagement, which is something that a lot of us forget about, is the social part of things. But really, that's the thing that I think can affect an older adult the most. If they have everything else in line and their social network is gone, it's just as detrimental to their health than if they were living in a different situation. So it's just exciting to see the way that we're adjusting to things in the future.
It really is exciting to see that from a technology standpoint, a lifestyle standpoint, and all the different ways that there are options to help fund care, whether it's aging in place or moving forward into facility-based care, what have you. So, Mike, I have a question for you about the generations and generations in this business. And I want to preface it by a little shout out to Medicarians, because this is the first year that they've done the Medicarian scholarship. And there's a group of high school seniors that are here on scholarship for the meeting. I don't know if you've seen a trio of young men running around here that been absolutely blown away by what they've walked into. By the way, don't buy them beers. They're seniors in high school. Eat no matter how much they ask. They coming to see this and touch it, sit in some sessions, their eyes are wide open. I think they're going to be anxious to get their insurance licenses after leaving this place. So, Mike, what more can be done to recruit the next generation, to excite the next generation about this business, bring them in, nurture and grow a business, and then on the other end, create a valuable business that has a valuable exit strategy, like the life cycle of it?
Yeah, great question. The thing with, I'm going to say younger generation because I feel like I am in that category.
Kids like you, Mike.
I'm not a high schooler, so. But the thing is, it all comes down to mentorship. Because you guys look in this, once Tara said it, this isn't a sexy industry. So how can you show a younger person that they can make a complete career out of this non-sexy industry? I was very fortunate that I had a fantastic mentor that took me from green, and we grew it and exited in less than 5 years. So I believed in my mentor and saw that, hey, he was very successful in this, and he showed me the path. And I was able to have that mentorship, saw how to become a leader, and then had a shot of getting ownership. Because the thing is, you can become very, very rich as being an insurance agent, but you become very wealthy when you sell your largest asset. Most everybody in this room, your largest asset is your business. And it's, when it comes to succession planning, one is you have to protect it. Like we tell people, like, hey, here's your blind spots. Here's insurance to cover your blind spot. But who here actually has a succession plan in place? 83% of insurance agents have nothing. And that younger generation can be your succession plan if you show them the way. And as agency owners, and I'm kind of calling myself out on this, it's like you have to change your mindset. That it doesn't have to be, I have to do this, I have to do this. You got to shift from working in your business to working on your business. And the biggest lever to pull is your time. How can you leverage your time through delegation? Because I personally don't like doing service work, but guess what? It's part of the business. So you can pull that lever and bring a newer talent on board, show them, hey, this is how you get started. And over the years, 3 to 5 years, like you don't get rich overnight in this business, but you can definitely show them the path. Hey, year 1, year 2, and just be open with them. Because the thing is that, once again, extremely fortunate, my mentor showed me everything. Like, hey, here's how you do this. Phase 1, phase 2. And it was very advantageous for me.
I would say, here we go. Mike, coming in the running now.
Can you guys, a little bit more, please?
Yeah. I would say, turning a not sexy thing into a sexy thing is pretty sexy. So, right. We're getting comments up here that you're not seeing.
Yeah, it looks like a college group chat.
Yeah. Oh, look, a war plan just came in. So, in the last 5 minutes, what I really like to do is throw a question to all of you at the same time. And we'll go down, Justin, start with you. What is something tangible that people can take back to their office from everything that we're talking about, your expertise, something actionable they can put into practice on Monday that will have a positive impact on their business, on their clients?
I think I'll just go off the cuff with this one. I really think this is the world according to Justin at this moment. But I think...
That's what we're looking for, man.
Yeah, all right. there's a high percentage of agents. There's also a high percentage of GA offices. There's a high percentage of vendors, whatever your business is, that have not documented a thing. Everything is tribal knowledge learned by osmosis, and the only way you are left to mentor somebody, to replicate yourself, or to train anybody is to stick them in your hip pocket and make them follow you around and do things. So one of the most tangible things that I think you could do is create a plan for one thing before you go home. And typically I'll challenge like any team like I'm traveling with, or I know a couple of people that I work with are here. There are a lot of times like before we leave an event, we're gonna challenge ourselves to say like, what are the 3 things we're gonna do right now? Not put on a list and forget about doing it because you slept the whole way on the plane. And that's okay. We've had a blast, we've built a ton of relationships. But what are you gonna do right now? Because I guarantee you when I said that, most of the people in this room thought of one process that they're like, ooh, I got some exposure there. I don't know how to quantify what I do or how I do it. And I don't know if you've seen like the mentorship square. Sometimes that's helpful to think about, but like when you're mentoring people or trying to replicate yourself, you start up in like the upper left or upper right, and you kind of go, I do, you watch. I do, you help. You do, I help. You do, I watch. And if you haven't taken some of your processes and said, well, what does that first leg of that journey look like when it comes to taking an app? What does the second leg of that process look like when it comes to quoting a product? If you haven't mapped that out, how the heck are you going to train it? And that's what I think.
Well, that's what he said, and he's sticking by it.
Yeah, that's it. Honestly, I just think, hey, here we go.
Oh, man. Justin's still winning. He's still winning.
It's not over yet.
Tara, come in strong. Come in strong. What can somebody do?
Well, I would challenge you when you go home to maybe think outside of your silo that you've been in. Where are some other opportunities, the needs that you see your older adults bring to you, where you can maybe partner and go out and educate the community. I'm really big on education, so find non-traditional partners to go out with. You know, maybe have what's covered by Medicare and how to fund the difference, and partner with a reverse mortgage person or a life insurance settlement person or a VA aid and attendance person, and really talk about all the other questions that you have or your older adults have that you might not necessarily have the answer to. Those make fantastic partners and referral partners and long-time partners in education. That would be my tip. Thank you, thank you, thank you.
This is a nail biter. This is a nail biter. Mike, bring us in for a landing.
I'm no pilot, but I'll do my best.
But you do play one on TV.
Yep. So I'm gonna definitely kind of like go after, like Justin said, like standard operating procedures. Like you have to change your mindset to a phrase I tell my clients all the time is dry. Don't repeat yourself. So when it goes to those procedures, is document it. It's easier to hand somebody an SOP and they know exactly how to make a call, how to write an application, and then you can go back to your time and focus on something else. The biggest lever that you can do when you go home is audit your time. There's something first assignment I give all my clients is a time and energy audit. Track what you do every single day in 15-minute increments. You're gonna realize really quickly where you're wasting your time or where you can delegate. And just focus on the tasks that generate income and also tasks that only you can do. So that's the biggest thing I think all agents need to do is audit their time, because that's one thing you don't get back.
And everybody's getting blue ribbons. Everybody's getting blue.
This is like upward basketball. Everybody's going to get a
Yeah.
trophy. It's fine.
Participation, and you're all getting participation trophies, by the way. So I'll end it with just this final thought, and that is, in terms of a tangible thing to do, is put yourself in the position of being a solution provider and not a salesperson. Be an expert in your space, be the best at what you do, and make sure others know it, but then expand the tools in your toolbox through partnerships. Reach out, be more than just you're trying to sell the one thing. The messages keep coming. And be a solution provider. You're going to get a lot more goodwill, a lot more respect, a lot more trust, and a lot more growth in your business if you are looked at that way instead of a salesperson. 0, 0, 0. We have landed on time, on target. Thank you so much for being part of this.